Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with the euro-dollar pair with Paulo Greco.
The average volatility of the EURUSD pair over the last 5 trading days stands at 134 pips, which is classified as high. On Monday, February 2, the pair is expected to trade within the range between 1.1718 and 1985. The upper linear regression channel is pointing upward, indicating the potential for further appreciation of the euro. The CCR technical indicator previously entered overbought territory and formed two bearish divergences, warning of a possible corrective move. It is also important to note how sharply volatility increased once the pair broke out this sideways range between 1.14 and 1.1830. EURUSD has now entered a relatively strong correction with a broader uptrend. At the same time, the global fundamental backdrop remains critically important for the market, and it continues to be clearly unfavorable for the US dollar. The pair spent 7 months trading within a sideways range, and current price action may signal the beginning of a renewed global trend in 2025. From a fundamental perspective, the US dollar lacks a solid foundation for long-term growth. When price trades below the moving average line, it's a sign line on the graphic. Small short positions may be considered on purely technical grounds, with a target near 1.1719. Above the moving average, long positions remain the preferred scenario, with upside targets at 1.1985 and 1.2085.
Let's trade with the MACD indicator. It's time for GBPUSD. Jakub Novak presents.
You could plan to buy the pound if price reaches the entry zone around 36.84, targeting a move higher toward 1.3725. Around 37.25, you could plan to exit long positions and open short positions in the opposite direction, aiming for a 30-35 pip pullback. A bullish move in the pound today should only be expected following very strong economic data. Before entering long positions, make sure that the MACD indicator is above the zero line and just starting to move higher from it. You could also plan to buy the pound today if price tests the 1.3653 level twice in a row, while the MACD is in oversold territory. This would limit the pair's downside potential and could trigger a bullish reversal. In this case, a move toward 36.84 and 37.25 can be expected. You could plan to sell the pound today after a breakout below 36.53. which could trigger a sharp decline in the pair. The key downside target for sellers 1.3616. At this level you could plan to exit short positions and open long. In the opposite direction, targeting a 20-25 pip rebound. Sellers are likely to take advantage of any opportunity to push the pound lower. Before entering short position, make sure that the MACD indicator is below the zero line and just starting to move lower from it. You could also plan to sell the pound today if the price tests 1.3684 twice in a row, while the MACD indicator is in overbought territory. This would limit the pair's upside potential and trigger a reversal to the downside. In this case, a decline toward 1.3653 and 3616 can be expected.
That's all for today. See you online soon.